Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about UNITIL CORP quarterly report. UNITIL Corporation offers a range of businesses and services, including distribution of electricity distribution, of natural gas interstate, underground natural gas transmission, pipeline access and transportation, services real estate management, services electricity distribution in plus southeastern seacoast and state capital regions of New Hampshire, plus greater Fitchburg area of north-central Massachusetts natural gas distribution in, plus southeastern New Hampshire, plus portions of southern and central Maine, including Portland and Lewiston-Auburn areas. The decline of UNITIL Corp stock price in the past year can be attributed to several significant events. The first quarter 2025 earnings report and guidance reduction on May 6, 2025, led to a 9.6% drop in shares, while an intraday plummet on August 10, 2025, resulted in a 9.4151% decline. These single-day events were part of broader market pressures that caused the stock to lose approximately 35.9% over the past year and 32.8% since the beginning of 2025. The sustained downward trend indicates that various factors, including technical pressure and institutional selling, have contributed to the decline in UNITIL Corp's stock price. The primary drivers of revenue growth or decline in a company is often influenced by several key factors. In this context, 6 primary drivers have been identified. Firstly, strategic acquisitions such as those made with Maine Natural Gas Company and Aquarian Water Companies significantly contributed to revenue growth. Rate adjustments also played a crucial role, particularly in jurisdictions like Northern Utilities and Fitchburg, where rate increases led to increased revenue. Weather patterns, specifically the colder winter of 2025, resulted in higher gas sales and revenue. Additionally, customer growth, particularly among residential electric and gas customers, drove revenue upwards. Long-term renewable contracts also contributed to revenue growth by securing clean energy purchases. However, changes in wholesale energy costs for electric power and gas had a negative impact on revenue. These factors collectively highlight the importance of strategic planning, market conditions, and external influences on a company's financial performance. Net income and profit margins experienced mixed changes in the given period. While net income saw a decrease of $300,000 in Q3 2025 compared to Q3 2024, it increased year-to-date, YTD, 2025 compared to YTD 2024. The net income also decreased from $31.5 million to $31.2 million. Profit margins showed varying trends as well. Electric adjusted gross margin increased by 11.4% and 5.8% in the 3 and 9 months ended September 30, 2025, respectively. However, electric GAAP gross margin decreased by 8.8% in the 9 months ended September 30, 2025. Gas adjusted gross margin increased to 21.1% in Q3 2025 and 13.8% YTD 2025. The operating income margin increased from 6.3% to 7%, but net income margin decreased from 8.6% to -0.3%. These changes suggest that the company's profitability improved in some areas, while it struggled with net income and overall profit margins. The company's financial performance indicates a consistent trend of generating positive operating cash flow, with a notable increase from $102.6 million in 2024 to $109.9 million in 2025. This upward trajectory suggests that the company is efficiently managing its operations and converting earnings into cash, positioning it for long-term success. The company's debt level has experienced a significant increase over the past year. Between December 31, 2024 and September 30, 2025, short-term debt rose by $53.2 billion, while long-term debt increased by $27.1 billion. Total long-term debt also saw an increase of $27 million. This substantial rise in debt is accompanied by a notable surge in interest expenses. The company's net interest expense has risen by 20.3% and 23.5% for the 3 and 9 months ended September 30, 2025, respectively. Management is optimistic about the company's outlook, citing historically favorable results in the first and fourth quarters due to seasonal weather conditions. However, they acknowledge that revenue decoupling may require adjustments to targets based on rate cases and other factors. The company's regulated operations will be subject to FASB codification provisions for regulated operations, while power purchase agreements may not qualify for derivative accounting until contingencies are satisfied. Management is exploring ways to procure offshore wind generation to comply with Renewable Energy Portfolio Standards (RPS) legislation. In terms of strategy, the company plans to expand its service territory through acquisitions, invest in new infrastructure and services, and adapt to changing regulations and climate goals. Specifically, they aim to achieve net zero GHG emissions by 2050 and present a portfolio of initiatives to help the Commonwealth meet decarbonization goals over the next 5 to 10 years. The company's strategy also involves expanding its supply portfolio capacity through acquisitions, including the acquisition of Aquarian water companies, subject to certain conditions. Overall, management is focused on maintaining customer interests in safety, reliability, affordability, and equity, while navigating changing regulations and climate goals. The company has made several strategic moves through acquisitions and divestitures to expand its operations. Acquisitions include the purchase of Bangor Natural Gas Company, Maine Natural Gas Company, Aquarian Water Company of Massachusetts, Inc., Aquarian Water Company of New Hampshire, Inc., and Abenaki Water Co., Inc. These transactions are expected to enhance the company's presence in the gas and water sectors. On the other hand, the company has divested its long-term power supply contracts. This move is likely aimed at streamlining operations and focusing on core business areas. The company has a history of paying dividends to its shareholders. In 2025 and 2024, the company paid out $22 million and $20,600,000 respectively in dividend payments. Additionally, quarterly dividends were declared on common stock at $0.45 per share. In terms of share buybacks, the company has also been active in this area. In a specific instance, 44,968 shares were sold under the ATM program and DRP/401K plans, resulting in net proceeds of $2.3 million. Concerns about inventory buildup exist. The financial summary highlights a pressing concern regarding inventory buildup in the company's operations. Specifically, there is an increase in gas inventory from $1.1 million to $1.3 million between 2024 and 2025. Furthermore, natural gas storage inventory has also seen a significant rise, amounting to $14.4 million at September 30, 2025. These increases raise questions about the company's ability to manage its inventory levels effectively. The accumulation of excess inventory can lead to wasted resources, reduced efficiency, and potential losses if not properly managed. It is essential for the company to address this issue promptly to avoid any adverse consequences. That concludes the financial summary for UNITIL CORP. Feel free to comment below, and I will be happy to answer them when possible.